Hello, and welcome to the Victory Litigation Fund presentation. I am grateful for your interest. Victory is a tokenized venture capital fund that focuses on litigation finance. My name is Lasorsa, and I'm the managing general partner of the fund. By way of background, I'm a graduate of the United States Naval Academy and a Marine Corps combat veteran. I received my MBA while on active duty, and I spent 15 years on Wall Street, specializing in capital markets, prime brokerage, and derivatives trading. I've been involved in litigation finance since 2014, and since that time, I've generated over $500 million in legal fees for a small group of law firms and private investors. 2015, I had a $40 million exit when I founded and sold a law firm as a non-attorney partner. During that project, I helped over 6,000 plaintiffs receive substantial legal awards, and I achieved a 2.5 multiple of invested capital, or MOIC, in 11 months for my investors. Meet Ed Lott. Ed is my lead investor, and he has been involved in legal lead generation since 1994. Through his various lead generation companies, he's originated over 1.3 million cases for law firms since 2007. He's also originated over 25,000 signed cases for 12 different law firms and 6 different legal marketing campaigns in Q1 of this year alone, through his current company, Zero Risk Cases. Ed has committed to purchasing $5 million of tokens of the $15 million being offered in our current Reg D, which he will fund with future fees from existing cases he's originated. So, Ed's extensive legal lead generation experience and financial backing are tremendous assets to the fund. Together, Ed and I intend to address a critical issue in society today. Specifically, people are actively being harmed by multiple sources, like harmful pharmaceutical drugs, defective medical devices, human trafficking, and even the COVID-19 pandemic. Unfortunately, most law firms need help to obtain justice for their clients. That's because finding plaintiffs is expensive and difficult. In addition, verification of each plaintiff's case takes time and capital, and most law firms don't have sufficient resources or the skills to do this. Litigation finance is an asset that consistently outperforms other traditional asset classes, including gold, bond, and even real estate. Litigation finance opportunities are sought after by hedge funds, venture capitalists, and elite investors for its non-correlated significant return on investment. The fund intends to deliver between 3 to 9x MOIC per campaign with equally balanced evergreen distributions and reinvestments. I expect the first distribution to occur within 1 to 3 years or less. In simple terms, Ed and I will follow the same proven process that's been used for years by the most successful law firms, and by doing so, we intend to achieve similar returns for our investors. We have both done this before with verifiable track records, so this isn't our first rodeo. And to the best of my knowledge, few, if any, other current tokenized venture fund offerings in the marketplace can compete with the typical returns Victory intends to achieve. This is because Victory is structured more like a plaintiff's contingency law firm and less like a venture fund. Unlike many security token offerings, our offering is not a startup opportunity per se, because nothing needs to be built or proven. Rather, there is a small but very well-established legal services marketplace actively providing these services now. And because of Ed's and my expertise, the fund will have immediate traction in an asset class that has high barrier to entry. I developed this valuation methodology by originating over 50,000 cases in 10 different legal marketing campaigns for the law firms I worked for. I retained the services of a prominent law firm to help create and design the token of participation structure. The token of participation is an alternative to the traditional but restrictive approach of an individual having non-attorney ownership of a law firm. I've received a legal opinion from a third-party due diligence provider validating the ethics of the structure. The Victory Token of Participation, or TOP, solves the traditional restriction on legal fee sharing with non-attorneys. This top is the secret sauce that Victory will achieve, or rather, that will help Victory achieve returns far greater than typical debt structures of other litigation finance offerings. The top is a revenue share token that mimics a structure commonly used in municipal finance. The top is an agreement between the fund and contracted law firms for leveraged performance fees. Specifically, the law firm pays the fund a multiple of the cost of acquisition of the case. The fixed flat fee is paid after the case settles. Importantly, the amount paid by the law firm is not based on the final plaintiff legal award or law firm profits. Rather, it's based on the cost to acquire the case. The litigation funding market is large and growing, expected to reach over $20 billion by 2026. That's up from over $11 billion in 2019, which equals a 6.5% compound annual growth rate. Here's a sample of some of the recent high-profile trial verdicts and settlement awards. 2020, Monsanto paid out $16 billion of settlements for injuries caused by Roundup. In 2021, Johnson & Johnson set aside $4 billion for talcum powder, with additional funds expected to be allocated to settle these claims. And in 2022, there was a $110 million verdict against 3M for combat earplugs. Now, I don't have enough time to go into the fund economics. If anybody has specific questions, catch me after the meeting. But I will say, however, that the reason the Victory Fund has no comparison to other venture funds is because of the profitability of the collateral. And the collateral is the underlying legal claim, far more profitable than venture equity. To give a simple example for the flow of funds on a 6X campaign, for every $1 invested that yields $6 in return, Victory will distribute $3 back to investors and then reinvest $3 to acquire new cases. If that $3 reinvested were to also produce a 6X, then that would produce a second $9 distribution to the investor and an additional $9 to reinvest in new cases. So, by reinvesting a substantial portion of the profits back into acquiring new cases, Victory more closely resembles a top-performing law firm than it does a venture fund. I intend to split the case development costs equally among 3 different case types described in the PPM. Those case types are human trafficking, which is a single event case type, talcum powder, which is a mass tort case type, and the ERTC, the Employee Retention Tax Credit Program, which is a government administrative program. Each of the 3 has their own case origination methodologies, cost structures, and time duration, so I've segregated them for transparency purposes. The ultimate goal of this limited-size Reg D offering is to establish small dockets of each of these case types in a short period of time while issuing the fewest tokens possible. The reason for this is that I intend to limit the number of tokens issued by the fund to a maximum of 100 million tokens in 3 stages. I've already closed a 10 million token pre-seed round with strategic and legacy investors. As I mentioned, 5 million tokens at $1 per token have been set aside for purchase by EdLot. The remaining $10 million in tokens are available to investors now. After the initial $15 million of tokens are sold, I plan to work towards conducting a Reg A offering in the first quarter of 2023 to bring this type of profit potential and altruistic impact to the broadest audience possible. What makes our fund unique is our experience in a very high barrier to entry industry. We have an existing infrastructure that provides immediate market access and traction. But most importantly, from my personal perspective, Victory intends to build a socially conscious community through the Do Good to Get Paid charity token. And as much as I would like to talk about that project here, I have to wait until we complete our Reg A due diligence process to say more. But I would like to invite like-minded people from this vibrant and growing Vertalo ecosystem to work with Victory to help bring the legal services marketplace and the charitable giving community onto the blockchain. And we can do all of this while achieving the same type of economic returns enjoyed by the most profitable law firms. If this type of project resonates with you, please find me before the end of the conference, and I would be happy to share the larger vision of the fund. Thank you for your attention to this presentation. And I was on the advice of counsel, right? Because anything you do in litigation finance, you can and will be sued, right? So this is an entirely different type of asset class than what's being presented here, because in every instance, you go into it adversarially. So while the ecosystem is fantastic for its collaborative nature, litigation finance is a very different asset class, and we have to be aggressive on behalf of our plaintiffs. So again, cultural nuances, right? So if I present in a different way, it's outwardly. But inwardly, with this group, please, I want to avail myself of the expertise and, more importantly, the elevated nature of this community, because litigation finance is not like this. So with that, I'll take any questions. Yes, sir.
Why is the payout is a multiple of the cost of acquisition?
Yes, sir.
Why is that better than waiting for a really large windfall settlement?
Well, so you are waiting for the windfall settlement, but you're getting the multiple of the cost of acquisition as a compliant way to participate, right, in the legal award. If they were to, like traditional, the way that Ed Lott is currently doing business, he gets paid for originating the cases, and the margin on that is 20%. So it is a much lower margin business. If with financing, you originate the cases and you extend the duration before payment, then you get a higher multiple. And more importantly, we're adding leverage to the law firm, right? So the law firm is getting more cases, and therefore we're able to participate in more of the legal fee. Does that make sense?
Yeah, I want to talk, but we'll catch up after.
Yes.
I got a lot of questions as well.
Yeah, so everything, case selection is a big type, right? So when you think about litigation finance, there are those firms that fund speculative litigation. We're not doing that. Tort selection, as we refer to it, many of these cases already have qualified legal settlement funds or bankruptcy trusts. So in essence, we're mining legal fees, right? So for those unfamiliar with the industry, the trial is but one part of the process. There is an extensive settlement process where additional cases are originated, validated, and paid. And that is the market that we'll participate in. That's a nuance that I couldn't really include in a relatively short presentation, but tort selection, timing, and then the ability to originate cases in alternative case strategies, right? So instead of direct response advertising, we use data, right? Or other methodologies that give us lower cost, higher value cases.
Will the fund pay out, or the token pay out of cash flow?
Yeah, so in the PPM, it says anything over $1 million is swept to the token holders on a pro rata basis. So cases, you will acquire a large docket of cases, and then the cases settle individually. So there's a steady stream of cash as cases settle. So we're not going to pool it and then pay it out. As it goes up to $1 million, we'll pay out pro rata. Any other questions? Okay, very good. I am Ron Lasorsa, and I'm building evergreen wealth by advancing social justice, and I'll get that better the next time. Thank you for your time.